Welcome to Daily News Headlines. Headline number 1. Goldman plans more layoffs, FT. Goldman Sachs is planning another round of job cuts that could start as soon as October, the Financial Times reports, citing unnamed sources. The reductions will target bottom performers and come as part of an annual exercise that typically results in 15% of staff losing their jobs, or a minimum of about 440 jobs, for the Financial Times. Goldman cut roughly 3,200 jobs, 6.5% of its workforce, in January due to a dramatic slowdown in investment banking activity and losses in consumer banking. Headline number 2. Kroger settles $1.2 billion opioid claims. Kroger said Friday that it will pay $1.2 billion to various states and Native American tribes to settle claims that it helped drive the opioid epidemic through lax oversight of its pill sales. The chain said the settlement is not an admission of wrongdoing or liability, and that it will continue to vigorously defend itself against any other opioid-related claims. Minutes after announcing the settlement, Kroger released its second quarter earnings, which bested Wall Street's expectations but still showed a loss of $180 million. Kroger and Albertsons, which are preparing to merge, announced Friday that they will sell off more than 400 stores to C&S Wholesale Grocers, which operates stores under the Grand Union and Piggly Wiggly brands. Headline number 3. Walmart cuts starting pay for some. The largest private employer in the U.S. is paying some new hires less, a sign of loosening in a historically tight labor market. New hourly workers at Walmart now make the lowest possible wage under its compensation structure, which starts at $14 but varies by region, The Wall Street Journal reported, citing documents it reviewed. Before the change, certain hourly workers earned slightly more than the base starting pay. Before the change, certain hourly workers earned slightly more than the base starting pay. The mega chain says standardizing pay enables employees to change departments without sacrificing any income. The cuts don't apply to existing staff. This change also included raises for approximately 50,000 associates in specialty areas of the store as we continue to invest in associates' growth and development, a Walmart representative told LinkedIn. The quit rate for retail workers is more than 70% higher than in other U.S. industries, says Bloomberg, citing a McKinsey study. Headline number 4. Apple stumbles as China woes grow. News that China is expanding a ban that keeps its government workers from using iPhones has hit Apple's stock price by nearly 7% over the past 2 days, costing the company about $194 billion in market value, per the Wall Street Journal. Investors are concerned about the ban's broader implications for tech firms in China, especially since Apple has been one of the industry's most successful operators in China's massive economy. Its market share has grown despite tensions over trade, which include U.S. efforts to restrict China's access to new technology. Also weighing on investors, a report that Apple rival Huawei's new Mate 60 Pro smartphone is powered by an advanced chip that was made in China. Headline number 5. Millennials lead way on hybrid work. Millennials are more likely to be splitting their time between working on-site and remotely than their older counterparts, LinkedIn's latest workforce confidence survey reveals. In fact, 20% of millennial employees, born between 1981 and 1996, were in hybrid roles in August, a steady pattern for more than a year. By contrast, 17% of Gen X, ages 43 to 58, worked hybrid last month, while 15% of baby boomers, ages 59 to 77, did so. Data for Gen Z isn't extensive enough to be analyzed on its own. Fact of the day. U.S. bankruptcies have spiked 54% in the past year. Thanks for watching.